So, hi guys, can you please confirm now? Is the audio and video clear? If yes, we can get started. Okay, I hope the things are clear. So, let me get started with the things. So, in last class, we have started with valuation of goodwill chapter, and we have understood that there is an interlinkage between valuation of shares and goodwill as well. Okay, if you just quickly ask me to revise the things which we have discussed, we have understood how valuation of shares and goodwill will be done. One second, video is blur. I think it is fine from my end, maybe little network issue is there. So just wait for 1 minute. If the video is still blur, please let me know. Probably I can restart the live. Okay, there is some little network issue I guess. So now it is fine. Fine. So basically we have understood whatever the valuation of shares ka methods which we will be learning, those are specifically applicable for unlisted entities is what we have understood, because for the valuation of listed entities there are many other factors based on which the valuation of the share may depend. But when it comes to unlisted shares, purely it is based upon intrinsic valuation. Of course, there are other methods as well to do the valuation, so which we will be learning in detail. So before that, we have understood intrinsic valuation is nothing but we have to calculate the net assets of any entity, and you have to divide that net assets by total number of equity shares. Then you will be getting the value per share. That is exactly called as intrinsic value of the share. And then we have understood if goodwill is there, you have to value the goodwill also while calculating the value of the share. If specifically any goodwill is present, that goodwill ka valuation also we have to do. In order to do the valuation of the share, you have to understand the valuation of the goodwill, so that we have started our calculations with the goodwill ka path. Okay? Yes, sir. And then we have understood this valuation of goodwill is there na, that is essential for an entity for the purpose of share valuation, and we have started with goodwill ka discussion. First we have understood, sir, what is the meaning of goodwill? Meaning of goodwill is nothing but ability of the firm to earn future profits based on the capital employed. We have to understand only two things to get the goodwill ka valuation. First thing, you should know how to calculate the future profits, and second thing, you have to understand how to calculate the capital employed. First we have understood, sir, how to calculate this future maintainable profits. What I have said is, based on the past year ka profits, we have to make an estimate of how our future profits will be. Based on that future profits ka estimate, we will be calculating the goodwill ka value. I hope this point is pretty clear. Then I have said that this future maintainable profits you have to calculate from equity shareholders point of view. First we have understood year 1, year 2, year 3. These are past years ka profits, Baba. First we will be starting our calculations with which things, sir? We will be calculating our calculations with profit before tax. Sometimes in the question they may give you profit after tax, but you have to start our calculations with this profit before tax. Guys, you have to only make the 4 adjustments. Sir, first one, prior period error adjustments you have to do. If there is any rectification of errors which should be done in the previous years, that we will be doing in the first. Second case, sir, if there are any non-operating items or non-trade investment related incomes, if there are adjusted in P&L account, you have to go ahead and make an adjustment with respect to that non-trade investments. The reason I have explained is, Are Baba, your core business itself is not to do such kind of investments. So in case if your P&L account if it contains any incomes from such non-trade investments, what you have to do is you have to eliminate that effect. In the same manner, if you remember, even while calculating capital employed also, I said that such non-trade investments are to be removed because the entity ka core is not doing non-trade investments. Okay, that is the logic which I have said. Then third adjustment will be extraordinary items and fourth adjustment will be non-recurring items. So example of these non-recurring items are, for example, if any sale of plant and machinery is there, if you have got any loss or gain on such plant and machinery ka sale, ideally speaking, that sale of machinery and all will not be done frequently. So if any year, in any previous year, if you have such kind of non-recurring items, we have to make an adjustment for that as well. If you adjust all those things, you will be getting something called as adjusted PBT. Then you have to take the average of adjusted PBT. Then you have to take the average of adjusted PBT. So this average is there now. We have to take normally simple average you have to take. However, if the question have asked you to do the weighted average, probably you can take the weighted average. If nothing is said, please go with simple average. I hope this point is clear. If nothing is said, you have to go with simple average. But if the question is specifically asking you to do weighted average, then aram se you have to do the weighted average ka calculations. We have problems, you will understand. Theoretically speaking, okay, we have understood. Then you will be getting average adjusted PBT. From that average adjusted PBT, you have to make future adjustments. For example, if any revaluation is done, on that revaluation amount to pay, you have to charge the depreciation in future. If upward revaluation is happened, obviously the depreciation which you have to charge will also be increased. So that increased amount also should be adjusted here. Or things like that. In future, may I have committed to incur few expenditures, or in future few incomes will be coming to myself. So all those incomes and expenditure ka future effects also will be adjusted, because we are, after all, we are calculating future maintainable profits. Okay, yes. Then we will be making an adjustment for taxes as well. Taxes, while calculating these taxes, you have to check if future tax rate is given in the question, because you are calculating future maintainable profit. So that is the reason why we have to take the future tax rates here. Finally, you will be getting adjusted PAT. To that adjusted PAT, what you have to do is preference dividend ka adjustment also you have to do. Very important. Sir, why we are doing preference dividend ka adjustment? Simple logic, guys. One logic I can say is preference share capital is also treated as a financial liability as per our Ind AS. So that is the reason why the standards will while the standards will ask you to deduct this preference dividend also. Finally, you will be getting future maintainable profits, and that should be multiplied with number of years of purchase. Sir, what is the meaning of number of years of purchase? Means I have already given the logic as well. This number of years of purchase is nothing but how many years I am expecting this same profits, this same future maintainable profits will be continued only with the help of goodwill. Okay, this will be directly given in the question from the examination perspective, but practically speaking, you have to make an assumptions. You have to understand for how many years I will be earning future cash flows only because of goodwill. That is subjective matter. Okay, that will be done based on different factors and all, but for examination perspective, this years they will be mentioning in the question. Always they will mention Baba. Okay, sir. Now we have understood second thing, Baba, capital employed ka calculation. This also we have to do from equity shareholders point of view. We have understood two kinds of approaches will be there. First one, asset side approach. Second one, liability side approach. Our first preference will be always to do asset side approach, because there are very less number of mistakes you will get if you follow this asset side approach. Okay, sir. First we will be adding all the fair value of assets. First we will be adding all the fair value of assets. Few adjustments are there. If you remember, goodwill, if they have given in the balance sheet, you have to ignore that goodwill, assuming it is self-generated. Sir, why we have to ignore? Arey Baba, we are recalculating the goodwill. Whatever the goodwill which they have given, that is of not important for us. We are recalculating the goodwill as on the date which you want to calculate the valuation of the share. So goodwill, if they have given in the balance sheet, we will be treating that goodwill as self-generated and we will be ignoring that goodwill ka calculation. But sir, the question is specifically saying that the goodwill is acquired goodwill, then take it in capital employed. Second point, non-trade investments, if they have given any, that non-trade investments also will be excluded while calculating capital employed. However, if specifically they have given trade investments, then you have to take those investments also while calculating capital employed. Sir, nothing is given, only investments ka word is given. Then you can assume that as non-trade investments only, and you should not include that in capital employed. Third point, we have understood, sir, if any fictitious assets are there. Sir, what is the meaning of fictitious assets? Debit side of the P&L account. Okay, deferred revenue expenditure, fictitious assets, preliminary expenses not written off. All these are not actually assets, so you just have to ignore these while calculating the capital employed. And if you remember this proposed dividend ka point, there is one problem you will understand there. This should be excluded. If they have given in the question as a liability, you just have to add back while calculating the future maintainable profits. Okay? Yes, sir. Sir, if nothing is given, I will be assuming book values and fair values both are same. And then I have understood this average capital employed. Preferably you have to take the average capital employed ka thing. But sir, average capital employed, how it will be calculated, sir? Very, very simple, Baba. Opening cap employed plus closing cap employed divided by 2. Sir, my opening capital employed, they have not given only. And aram se can do closing capital employed minus half of the PAT you have to do. Okay, sir. So fair value of all assets you have to take, fair value of liabilities you have to deduct. Liabilities, Baba, a little bit careful whether it is recorded or not recorded. Aram se you have to take all those liabilities. Aram se you have to take all those liabilities. The most important part is you have to take this preference share capital also. You have to take this preference share capital also because it is also treated as a financial liability from the Ind AS perspective. Also, you can think like this also. We are calculating intrinsic valuation from the equity shareholders perspective. So whatever the funds or amounts which I have to pay to preference share capital or preference shareholders, the same thing should also be deducted. And finally, I will be getting capital employed. I hope this point is clear. Please give me a heads up if you have revised it till here, and we have also covered this part as well, liabilities approach. It is very simple. Just take share capital, reserves and surplus. Money, equity, share capital, other equity you have to take. You just have to give only one adjustment. Goodwill, deduct non-trade investments, deduct fictitious assets, deduct. These three assets should be deducted. And one more thing, if there is any revaluation effect of assets and liabilities, if they have given in the question, this also we will be making an adjustment. But our preference is we will be calculating net assets from the first approach only. We will be calculating capital employed from the first approach only. I hope you have revised it till here. So please confirm if you have revised it till here. If you have any doubts, you can ask me. If otherwise, we will be starting with the subsequent discussion wherein we will be understanding, sir, what exactly are the methods which are essential for the valuation of the goodwill. That related discussion we will start. Please let me know if you have any doubts. If you are fine, let us proceed. If you are done, if you have understood all the points till here, please give me a heads up. If yes, we can get started with the subsequent discussion. Okay, very good. I got a response from the student that yes, sir, we are fine till here. So just a moment. Okay, so now guys, let us start with the methods of valuation of the goodwill. Sir, what are the methods of valuation of the goodwill? Arey Baba, aram se you can do. First, let us understand all the methods. Along with the formulas, I will try to explain the logic also for these formulas. Maximum cases, I will try to explain the logic of these formulas. We will be solving one problem as well, which will give you a clear-cut idea of to how goodwill will be calculated. We have taken the study material question only, so that through that question you will exactly understood what is this entire concept about. Okay? Yes, sir. Before starting, Before starting, okay, that thing I will explain later. So first let us understand methods of valuation of the goodwill. Guys, there are totally four methods. There are totally four methods, sir. First method is average profits method. Second method, Baba, super profits method. Third method is annuity method. And fourth method is nothing but capitalization method. Only four methods. Aram se you can remember. Easily you can understand these things. Completely logical. No need to mug up at all. Okay? Let us try to understand from the logic itself. Aram se you can remember. So this goodwill valuation is the core to do the valuation of shares. Guys, trust me, this intrinsic valuation of shares ka calculation, you will definitely get out marks. 7 out of 7 you will definitely get if you do the correct approach. If our approach is correct, you are going to get 7 out of 7 marks in this chapter. There is no scope for deduction. Okay? So you have to be conceptually strong. So whatever adjustment they have given, you just have to understand. Okay? Yes, sir. So how many methods are there, sir? 4 methods are there. First one, average profit method, super profit method, annuity method, and last one, capitalization method. First three methods are easiest methods. Aram so you can understand? Yes, sir. First, if you look at average profits method, sir, your goodwill will be, you have to calculate the future maintainable profits. Whatever the future maintainable profits which you have calculated above, please multiply that future maintainable profits into number of years of purchase. You just have to multiply this future maintainable profit into number of years of purchase. Sir, can you please give me an example? Aram se I can give an example. Okay? Yes, sir. Sir, average profits method is very simple. I have calculated that my future maintainable profits are there now. After calculating average and all, my final future maintainable profits, I have calculated that it will come to 1 lakh rupees. This average maintainable profits will say the same thing. Okay, 1 lakh you are saying now. So this 1 lakh should be multiplied with number of years of purchase. Sir, what exactly is that number of years of purchase means? Arey Baba, I am saying number of times. This number of years of purchase is nothing but you are estimating that you will be generating this 1 lakh rupees for the next 5 years only because of goodwill. Only because of goodwill, they are estimating that you will be generating this future economic, this future, what should I say, future maintainable profit of 1 lakh rupees for the next 5 years. So we will take the number of years of purchase as 5 years. From examination perspective, this will be directly given in the question. Okay, that much easier it is. Our goodwill in this method will be 5 lakh rupees. That's it, guys. Very simple. You just have to calculate. You just have to calculate the future maintainable profit, and future maintainable profit should be multiplied with the number of years of purchase. While doing the average, always you have to do simple average only. While doing the average, you have to do simple average only. Sir, but the question is asking you to calculate weighted average. Instead of simple average, then take weighted average profits. Sir, why exactly you have to do the weighted average and all? Let us try to understand. Are Baba, let us assume, sir, we are currently standing on 2024. We are calculating the goodwill ka value as on 2024. Now they have given us past 5 years ka data, 2023, 2022, 2021, 2020 and 2019. These are the past 5 years ka data they have given. You have to tell me, sir, which year ka profit gives the correct sense of estimation. Which year of profit will be nearer to the current year, which means we are currently standing on 2024, which means obviously the situations which are there on 2023 would be more accurate while determining the goodwill ka calculation rather than 2019. Are Baba, since this is the nearest year for calculation of goodwill, this year ka profit will be having more weight. this year ka profit will be having more weight, sir. Why? Because this is the more accurate representation of our current situation. 2019 में there are different political conditions, 2020 में there are different economic conditions, but out of these 5 years, the most realistic representation which I can have is this year 2023. So sometimes they will give weighted average, but don't apply your minds from the examination perspective. If you want to apply the weights, you have to give the highest weight to the most recent estimate. Highest weight you have to give to the most recent values, which means you have to give the highest value to 2023. Obviously correct. What you are saying is obviously correct. So you have to give the highest weight to the 2023. But remember, don't be over smart. If the question specifically asks you to apply weighted average, then only we will be applying weighted average. Another gyan also I will give. Sir, we will be applying weighted average only when there is trend in the profits. Sir, what is the meaning of trend in the profits? Let me take an example. Sir, 2019 ka profit is 50,000, 2020 1 lakh rupees, 2021 2 lakh rupees, 2022 3 lakh rupees, and 23 में 5 lakh rupees. If you observe here there is an increasing trend in the profits. So here you have to apply weighted average. Guys, it may not be always increasing, even it can be decreasing trend as well. If you just reverse the profits with the years. For example, 2019 में 5 lakh, 2020 में 3 lakh, 21 में 2 lakh, 22 में 1 lakh, and 23 में 50,000. This is also a trend, decreasing trend. So ideally, you will apply weighted average when there is a trend which is observed in the profits. But again, I am saying, don't apply that much gyan. If the question is saying apply weighted average, aram se we can do. But you have to give weight, you have to give the highest weight to the recent figure. I hope this point is clear. If nothing is given, we will be doing simple average only. We have one question. If you have any doubts, you will be completely getting the clarity after solving that question. This is the first method. Guys. Average profit method is completed. Sir, goodwill ka calculation very simple. You just have to calculate the future maintainable profits, and that will be multiplied by number of years of purchase. Sir, what average I have to take? Arey Baba, go and take simple average. Sir, but the question is specifically asking me to take weighted average. Then take the weighted average. I hope this point is clear. I hope this point is clear. ठीक है सब. Now let us start this super profit method. Sir, what is this method which is called as super profit method? Sir, here in this super profit method, how I have to calculate my goodwill? You have to understand the concept. First of all, sir, this super profit method is there now. This is telling like this. Sir, assume I am a stationery shop. Assume I am having a stationery shop. Okay? Yes, sir. Sir, I have been running the stationery shop from the past 4 years. I have been running the stationery shop. Sir, for how many years you have been running, sir? You have been running from the past 4 years. So, I have developed some goodwill. Okay, sir. Clear, sir. Recalling partnership chapter from intermediate. Yes, exactly. Goodwill ka calculations. There you will interlink. Okay, nice interlinking. Fine. Sir, my stationery shop is there. From the past 4 years onwards, I have been continuing the business. Okay, sir. Now what I have observed is, I am currently calculating the goodwill. And I have found out that, sir, my future maintainable profits will be 10 lakh rupees. Sir, your future maintainable profits are how much? 10 lakh rupees from this stationery shop. From this stationery shop, I will be getting a future maintainable profits of 10 lakh rupees. Sir, have you calculated this? Like, we have already understood this calculations, right? This future maintainable profits ka calculation I have calculated according to this. One second. Okay, I have calculated according to this. ठीक है सर, we have calculated. Fine. Now what have happened is, I am an investor. I am saying that, Are Baba, I have decided that I will be paying this 1 crore rupees as the purchase consideration. I have assumed this 1 crore is the amount of consideration which I will be paying to you. And for suppose, sir, if I have invested this 1 crore rupee, in a fixed deposit, I will be आराम से getting 8% per annum interest. I will be आराम से getting 8% per annum if I have invested somewhere in my fixed deposit. Are Baba, here they are saying, so if I have this 1 crore rupees, if I invest somewhere, I will be getting a profit of 8 lakh rupees. I will be getting a profit of 8 lakh rupees. But you are saying, okay, if you invest in my business, you will be able to generate a future maintainable profit of 10 lakh rupees. So that person is saying, the person whoever is selling the business, he is saying like this, Are Baba, you will be earning 10 lakh rupees as a future maintainable profit. So this profit can be maintained for the next 5 years. Think like that. He is saying this profit will be maintained for the next 5 years. But you are saying, Are Baba, hold on. This 10 lakh rupees is not the actual profit which I will be getting. Are Baba, some adjustment also you have to make. Sir, what is that adjustment which I have to make? Are Baba, I will not be paying you goodwill based on the future maintainable profit. If I invest this 1 crore rupees somewhere as a fixed deposit, I will be getting 8%. So I am interested in investing you only because your business is earning extra 2% return. I will invest your entity only because you are earning extra 2 lakh rupees na. Because I will get 8 lakh rupees anyways. Aram se if I invest, still I will get this 8 lakh rupees. Oh, which means I am interested in investing your company only for the extra profit of 2 lakh rupees. This 2 lakh rupees is called as super profit. Normally your future maintainable profit will be this, but I am not interested in this because even if I don't invest in your business, I will aram se get this 8 lakh rupees. So I am interested in investing your company only for the extra benefit of 2 lakh rupees. Oh, so now I will be paying goodwill only on the basis of super profits. Guys, that's why I have said, if you understand, goodwill valuation is completely perception based. There is no one rule only to calculate the goodwill. It will depend upon number of factors. It will depend upon, see, very experienced valuationists, very experienced persons will generally do this goodwill ka valuation. They have to make different assumptions, whether to take super profits, whether to take average profits, how many years of purchase I have to take and all. It is not that much easy task as I am explaining. For exam perspective, obviously they will give years of purchase and all related data. Okay? Yes, sir. So now with this understanding, let us quickly check the second method, which is called as super profit method. Sir, in the super profit method, goodwill will be calculated as super profit into number of years of purchase. Oh, super profit into number of years of purchase you have to do. Sir, but what is the super profit? Are Baba, super profit is nothing but extra profit. Whatever the future maintainable profit which your firm is earning, you have to compare that with, Are Baba, if I have invested this amount somewhere, obviously I will be getting a return. So I have to make an adjustment for that return. And extra benefit is there. Now I am interested in investing in you only for that extra benefit. Na. So that extra benefit is called as super profit. So that will be getting by using the formula FMP minus normal profits. Sir, what is the formula, sir? Future maintainable profits minus normal profits you have to do, then you will be aram se getting the super profit. Sir, what exactly is this normal profit? Are Baba, that fixed deposit amount is there. Na? That is nothing but your normal profit. But sir, how I will be getting this normal profit is, Simple. You have to take average capital employed. Sir, what is this average capital employed? Just now I have said now, opening cap employed plus closing cap employed divided by 2. Sir, opening capital employed is not given in the question only. Then arams I can do another formula. Closing capital employed minus half of the PAT. I hope you are interlinking. That average capital employed should be multiplied by normal rate of return. Sir, what is this normal rate of return? Arey Baba, come to SFM. Normal rate of return is nothing but, sir, this is, I can say that this is the market rate. If I invest this money somewhere, whatever the rate which I will be getting, that is known as normal rate of return. Other words, weighted average cost of the company. Weighted average cost of the company. Arey Baba, this is SFM going on. Aram, so you can understand. For exam perspective, this normal rate of return will be directly given in the question. This is nothing but if you invest this amount somewhere, what is the return? What is the return which you will be getting? That is this normal rate of return. Okay? Yes, sir. So this normal profit will be getting by average capital employed into normal rate of return. Guys, you will get complete clarity while solving the problems. That is my assurance. Easily you can answer. Okay, sir. So goodwill will be super profit into number of years of purchase. Sir, what is this number of years of purchase? That will be given in the question directly. But normal profit, how I will be getting? Arey Baba, average capital employed into normal rate of return you have to do. This normal rate of return also they will be giving in the question na. So complete clarity you will get after solving one problem. I hope this super profit method is also clear. So please confirm if it is clear. Let us start with the third method, which is called as annuity method. Annuity method. Let us quickly start the annuity method. Brilliant. Sir, Arey Baba, this is little bit advanced formula. This is little bit advanced method than the super profit method. Sir, this annuity method is there now. This is assuming like this. This is considering time value of money. Sir, what time value of money? Assume I have calculated my super profit. Assume I have calculated my super profit from the next 5 years as 2 lakh rupees. First year end, second year end 2 lakh rupees, third year end 2 lakh rupees, fourth year end also 2 lakh rupees, and fifth year end also 2 lakh rupees. Super profit method is saying 2 lakh multiplied by 5 if you do, this 10 lakh is there na. This 10 lakh is nothing but your goodwill. This is not I am saying, this is super profit method is saying. But annuity method is saying, Arey Baba, hold on, you cannot multiply this amount directly with 5. Arey Baba, time value of money is also there na. So please don't multiply directly with this. Rather, you have to calculate the present value. Sir, how I will be getting the present value? Simple, Baba. This 2 lakh rupees into present value annuity factor you have to do. R% n years you have to take. Please consider time value of money. That's it. Your annuity method ka formula will be completed. Super profit you have to take, annuity factor, interest rate, number of years you have to take. I hope you guys have know how to calculate the annuity and all. Okay? Yes, sir. So this formula is also clear. If this is also clear, let us move to the last valuation. Let us move to the last valuation, which is capitalization method, and once this is completed, we will be solving a beautiful problem wherein all the methods are covered. Okay, please give me a heads up if this third point is also clear to you. ठीक है? Yes, sir. Now, capitalization method. Sir, what exactly is this capitalization method all about? Let us understand. ठीक है? Arey Baba, remember one thing, sir, we are having two types of capitalizations. Sir, what are the two types of capitalizations which I am having, sir? Very simple. First one is average profit capitalization method. First one is what, sir? Average profit capitalization method is first one, and second one is super profit capitalization method. Second one is what, sir? Second one is nothing but super profit capitalization method. ठीक है sir? Average profit capitalization method, super profit capitalization method. Sir, first of all, let us try to understand this average profit capitalization method. First, let us understand the formula. First, you have to calculate the value of the firm. Sir, what is my value of the firm? This is nothing but future maintainable profit divided by normal rate of return you have to calculate. Sir, can you please give me an example so that we will understand? Answer is yes. Arey Baba, assume what I have did is, sir, I have calculated future maintainable profit of the entity. I have calculated future maintainable profit of the entity, and I have find out that future maintainable profit of the entity is 20 lakh rupees. Sir, how much is the future maintainable profit of the entity, sir? It is 20 lakh rupees, Baba. Okay, sir, we have understood this 20 lakh is nothing but the future maintainable profit of the entity. And in the question they have given, sir, this normal rate of return is there now. This normal rate of return they have given 20%. This normal rate of return they have given 20%. Now you have to find out the value of the firm. You have to find out the value of the firm. Guys, don't take it as a separate formula. Think like this. Sir, I am getting 20 lakh rupees from your firm. I am getting how much, Baba? You are getting 20 lakh rupees as a future maintainable profit. Sir, normal rate of return is 20%. Are Baba, you have to calculate the value of the firm. See, like how you will be getting this is, sir, how much amount I want to invest, how much amount I have to invest in the firm such that I will be getting a future maintainable profit of 20 lakh rupees provided the rate of interest, provided the rate of return is 20%. This is not the formula at all. Sir, how much amount I have to invest right now so that I will be getting a future maintainable profit of 20 lakh rupees provided my return is 20%. Sir, how I will be getting this is very simple, Baba. You have to do 20 lakh rupees upon 20%. Can you confirm and tell me how much is the value which you will be getting if you do 20 lakh divided by 20%? The right answer is 1 crore. The right answer is 1 crore is the value of the firm. Sir, what is this 1 crore? Arey Baba, if I am having 1 crore, if I have invested this 1 crore in the entity, based upon this normal rate of return, I will be getting a future maintainable profit of how much? 20 lakh. This is known as calculating value of the firm. Very simple. Sir, to give you the feeling of the formula, you can remember like this. Arey Baba, I will be getting a future maintainable profit of 20 lakh rupees, but return is 20%. So how much you have to make an investment so that you will be getting a 20 lakh rupees provided the rate of return is 20%. This only they have given as a formula. Strictly speaking, this only they have given as a formula. Sir, what is the formula? Future maintainable profits divided by normal rate of return. Sir, what is this normal rate of return? This is KE you have to take. Because you have to think from the equity shareholders point of view. You have to think from the equity shareholders perspective. So you have to take the KE. Sir, from examination perspective, they will directly give this part. They will directly give this part. I hope this point is clear. Sir, this is not the formula only, first of all. Please don't think the formula as a separate formula. then you will feel, sir, what we are learning. But understand, with the help of a logic, you will understand everything. You will remember everything. Okay, sir. Sir, this 1 crore is the value of the firm. Sir, but I have calculated net assets of the entity as 80 lakh rupees only. Oh, your value of the firm is 1 crore rupees, but if you calculate the net assets, sir, what is the meaning of my net assets? Are Baba, I have taken all the total of assets and I have taken all the value of liabilities also. Sir, it comes to 80 lakh rupees only. Oh, sir, what is the difference? Difference is 20 lakh rupees, and this 20 lakh rupees is nothing but goodwill. This difference of 20 lakh rupees is called as goodwill, and this is the formula how we will be calculating goodwill when it comes to average profit capitalization method. Very simple. You have calculated the value of the total firm. Sir, how much? 1 crore. But I have calculated the net value of the assets. I have understood. Arey Baba, only 80 lakh is the value of the assets. Oh, but you are saying your value is 1 crore. How you are saying? Arey Baba, I am having a goodwill of 20 lakh rupees, because of which my value of the firm will be 1 crore. Have you understood this point or not? Whatever the value of the firm you have calculated, from that you have to deduct the net assets of the entity. Then the balancing figure will be treated as goodwill. Then the balancing figure will be treated as goodwill. I hope this point is also clear. Brilliant. So this is how you have to calculate value of the firm using average profit capitalization method. Sir, what is the first one? You have to calculate the value of the firm, future maintainable profits divided by normal rate of return. And second step, you have to do the goodwill. Sir, how I will be getting? Step 1 minus net assets. Step 1 minus net assets, if you do, you will be getting goodwill. Sir, but what is the super profit capitalization method? Even more simple, just one formula: super profit divided by normal rate of return. Super profit divided by normal rate of return. Sir, why? What is the difference between this step 1 and step 2? Very simple, Baba. Here what you will be doing is, while calculating super profit only, sir, what is the formula for super profit? Very simple: future maintainable profits minus normal profits you will be doing na. Sir, how I will be getting this normal profit? Normal profit you will be getting like this: capital employed into normal rate of return. While solving the problem, you will understand. Super profit divided by normal rate of return. Super profit, how I have to calculate, sir? Future maintainable profit minus normal profits. Normal profits, how I have to calculate? Simple: capital employed into normal rate of return. I hope this point are clear. Sir, will we get the same goodwill? Will we get the same goodwill as per this super profit capitalization method and average profit capitalization method? Right answer is, ideally speaking, you should get the same answer. Ideally speaking, you should get the same answer as per this super profit capitalization method and the average profit capitalization method. But sometimes you will get different answers. Sir, when we will get different answers? This is the most important point, so please focus complete attention, you will understand. Normally speaking, capital employed and net assets should be same. Normally speaking, capital employed and net assets should be the same. Sir, what is this capital employed? Fair value of all assets you have to take. Fair value of all liabilities you have to deduct. Goodwill ka adjustment you have to do. Those adjustments we have already understood. That is how you will be calculating capital employed. Sir, what is this net assets? Arey Baba, this net assets also should be the same. But sometimes the question our institute will come and say that, Arey Baba, your capital employed is different, your net assets are different. Your capital employed is different and your net assets are different. This is heights of the institute. But okay, institute is institute. Institute is our God. So we will also assume the same thing, but this will be doing only when the question specifies. So if nothing is said in the question, both capital employed and net assets will be the same. If both are same, You will get the goodwill under super profit capitalization method as well as average profit capitalization method as same to same goodwill you will get. But if the question itself is specifically saying capital employed is different, net assets are different, then your goodwill will also be different. ठीक है सर. While calculating average profit capitalization method, consider net assets. While calculating average profit capitalization method, for example, this point is there, na? This is normal, and step 1 minus, here you have to take the net assets. Remember, while calculating average profit capitalization method, please take net assets. But while doing super profit capitalization method, while calculating super profit, if you remember, you have to also calculate the normal profit also. Sir, how I will be getting normal profit? You have to take the capital employed into normal rate of return. This is the only point you have to remember. While doing average profit capitalization, take net assets. Here, don't take the capital employed. Don't take the capital employed because this is average profit capitalization method. And while doing super profit capitalization method, take the capital employed, not net assets. You will understand. This is the thing you have to remember, guys. While solving examination, while solving question, you will understand this thing. Okay, so now what you have to do is just copy all the methods of valuation of the goodwill. We will be solving one question which will cover all the methods, so that if you have any doubts, the things will be clarified. So first, I just want you guys to write this. Read along while writing. You have to read also while writing. Okay? Yes, sir. So quickly copy, guys. So please tell me if you have done. We'll solve one problem with this goodwill calculation, goodwill valuation, and then we'll start with next part. So have you copied? If yes, we'll start with one question. Brilliant. So now let us start with one question, which is okay, so fine. Let us check this question number 8. Quickly open this question number 8, guys. This is in page 143. Page 143, question number 8. So quickly open this. Okay. Yes, sir. Let us read the question. They are saying XY Limited, a partnership firm, earned profits during the past 5 years as follows. XY Limited, a partnership firm. Okay. Guys, if you check this, they are saying XY Limited and they are saying partnership firm. It's okay. Institute is institute. Let us respect the institute. If it is limited, it cannot be a partnership firm. I think you guys have obviously know that fact, but it's okay. We can follow this. Okay, no worries. Guys, let me just give you one clarity. This valuation of shares and goodwill may, number of mistakes are there in our institute material. Number of mistakes are there. So what we'll be doing is we will be making corrections in the questions also sometimes, and in the answers also we will be making some corrections. Okay, so you have to be very careful and please write these notes very carefully. Some wrong answers are there in our study material. I will be correcting those. I will be making you correct as well. So here I have directly copied the data from the question only. I have directly copied the data from the institute material only. So somewhere we will be changing questions also, and somewhere we will be changing the answers as well. Okay? Yes. So here let us check the first question. 17, 18, 19. 1 second. 2020, 2021. What happened? Yes, so 5 years ka profit they have given. First, they are asking you to calculate the goodwill in each of the following independent cases. Okay, so they have given the first one, case A. It was decided to value the goodwill on the basis of 2 years purchase of average profit of last 5 years. Guys, normally speaking, you have to calculate future maintainable profits. By taking average of the past profits, you have to calculate the future maintainable profits, and of course you have to do some adjustments. But in this case A, there are no adjustments which are given in the question. Simply they are asking you to calculate the purchase of average profit of last 5 years. Okay, sir? Yes, sir. So here the question is very simple. So let me just solve that question for you. Okay, here I will solve. Okay, sir, what is the question number? Question number 8, let us solve here. Question number 8, let us write case A. Okay, yes, sir. Very simple. Guys, can you please tell me, it was decided to value the goodwill on the basis of 2 years purchase of average profit for the last year. which means sir here my goodwill value will be, my goodwill का value will be average profit, goodwill का value will be average profit into number of years of purchase. Guys, you can write along with me, you can write along with me. Important questions I will explain, but these are chotu sa questions, a very basic question, so aram se you can write along with me as well these questions. But if any question is intelligent, if any question is good question, then we will take time to understand and then we can copy. But since this is an aram se normal question, we can aram se check this part. ठीक है? Yes sir. If you calculate the average profit, if you calculate the average profit, I am directly calculating the average here, 27,000 plus 36,000 plus 37,200 plus 42,000 plus 46,800 divided by 5. If you do, you will be getting average profit of 37,800. Yes guys, it is very simple. So the average profit which I have got is 37,800, and that will be multiplied by the number of years of purchase which they have given, which means if you multiply with the 2, you will be aram se getting into 2 75,600. That's it sir, my case 1 ka answer is done. Case A ka answer is done. So we will not waste much time discussing there. Let us quickly move to case B. ठीक है sir? Yes sir. Case B, if you check, they are saying it was decided to value the goodwill based on 3.5 years. 3.5 years purchase of average profit of last 5 years after giving the weights of 1, 2, 3, 6, 8 to the profits chronologically. To the profits chronologically is what they are trying to say. Sir, how we will be doing is, aram say we have to apply the weights. We have to apply the weights. Sir, here they are only given the weights. Here Baba, they have only given the weights. So what we'll be doing is, out of these 1, 2, 3, 6 and 8, you have to give the highest weight to the recent profit. You have to give the highest weight to the recent profit. Sir, which means how I will be getting the weighted average? Case B may, sir, goodwill I will be getting same formula we have to take. Goodwill equals to average profit multiplied by number of years of purchase we will take. But sir, this time while calculating average profit, we are calculating weighted average profit, Baba. Sir, my weighted average profit is there now. How I will be getting, sir? 27,000 should be multiplied with 1. I will write here 27,000 into 1. Like this I have to give the weights. 36,000 into 2. ठीक है sir? Plus 36,000 into 2. So next third weight. 37,200 into 3. 37,200 into 3. Next 42,000 into 6. 42,000 into 6. And last one 46,800 into 8. 46,800 into 8. Guys, this is how you will be calculating weighted average. Divided by denominator mein I will be writing all the weights. So 1 plus 2 plus 3 plus 6 plus 8. Please calculate and tell me what is the answer. I am also calculating. You also please confirm and tell me, guys. So numerator में I will be getting 8,37,000 divided by denominator if I calculate 1 plus 2, 3 plus 3, 6 plus 6, 12 plus 8, 20 I will be getting. So 837,000 divided by 20, if I do, weighted average profit I am getting is 41,850. How much you are getting, sir? 41,850 is my average profit. Sir, 41,850 if I multiply with number of years of purchase, which means they have given 3.5 years. So sir, your goodwill will be, my goodwill will be 1,25,550, 125,550. This is my goodwill, Baba. Basic max is going on. I think goodwill ka calculation you will enjoy. There is nothing there is nothing conceptual. Okay. ठीक है sir. Quickly come to case C. Let us check the answer later. But case C. Sir, case C they are saying it was decided to value the goodwill on the basis of 3 years purchase of weighted average profit of last 5 years. Oh, so now they are saying, Are Baba, now do the goodwill valuation based on weighted average. If you observe this case B, they have directly given the weights. They have only given the weights. Sir, if they have not given the weights, you have to give 1, 2, 3, 4, 5 weights. As I have said that recent year you have to give the highest weight. Okay? Yes sir. They also mentioned maximum weightage to the recent results. Okay. So aram se we can calculate that part also. Okay. Yes sir. So I will be copying these figures. So sir, 27,000 into 1 plus 36,000 into 2 plus 37,200 into 3 plus 42,000 into 4 plus 46,800 into 5. ठीक है. Yes sir, this should be divided by 1 plus 2 plus 3 plus 4 plus 5. Sir, numerator में I will be getting 6,12,600 divided by 1 plus 2, 3 plus 3, 6 plus 4, 10 plus 5, 15 if I do, I will be getting 40,840. 40,840. So please confirm if it is correct or not. So here I will write weighted average profit. Weighted average profit, and sir, in case C, my goodwill ka formula will be weighted average profit multiplied by number of years of purchase. Number of years of purchase, sir, in the question they are saying number of years of purchase are 3 years. So 40,840 multiplied by 3 will give me, that is 122,520 is my goodwill ka amount. I hope this is also clear. This is also clear, I guess. Now let us come to case D. This is a little bit important. Let us check this. Case D. In this case D, they are saying, try to understand, it was decided to value the goodwill on the basis of 2.5 years purchase of simple average profit of the last 5 years. They are saying, Are Baba, go ahead and do simple average. Simple average ka profit you have to do from the last 5 years, and they are saying abnormal loss of 1800 rupees was charged against the profit of 2019. Okay. Abnormal loss have been happened and that is booked in the profit of 2019, which means strictly speaking this 2019 का profit is there ना, this 2019 का profit में already there is abnormal loss of 1800 which is recorded. Okay. Second point, if you check, they are saying profit for the year 2014 they have given, but you have to change to 2020 because in the question there is no 2014 ka detail only. but institute का study material में there is this mistake. ठीक है, so we will be आराम से adjusting. You have to change this 2014. Yes, treatment we will understand, Prasad. Whatever you are saying is correct, exactly correct. Basic common sense is going on. If you are a man with a basic common sense, आराम से you can get the correct answer. Okay. Yes, but change this question. Instead of 2014, you have to take this as 2020. Sir, they are saying, sir, my profit of 2020 includes a non-recurring receipt of 2500. This receipt will not recur in future. But in 2020 ka profit, this is already there na. Okay, sir, this is already there. So we will make an adjustment here also. Last one, closing stock of 2021 was overvalued by 2400. Closing stock of 2021 was overvalued by how much? 2400. 2021 ka closing stock, it is overvalued. Sir, how much overvalued? 2400 overvalued. This question may we have to make an adjustments for the past year ka profits. And based on adjusted profits for the past years, we will be calculating the average of future maintainable profits. Let us directly start. You will get clarity while solving the questions. So, sir, here I will be calculating calculation of adjusted PBT for the past years. Adjusted PBT for the past years. ठीक है सर, let us quickly start solving. You will आराम से understand. If you have any doubts, everything will be clarified. Sir, 17, 18, 19, 20, 21 का details are there. So I will be copying those items. 2017, 2018, 2019, 2020 and last one 2021. These 5 years ka details they have been given. So first let me start with PBT. I hope they have given this. Okay, I am assuming this as a PBT. So I will be taking this because nothing is mentioned. Tax is also not given. So PBT and PAT both will be same if tax is not there. Correct. ठीक है. 17 का profit 27,000, 36,000, 37,200. Let me just copy those figures. 27,000, 36,000, 37,200. Next two figures 42,000. 46,800. Guys, if you remember, we will be making plus or minus adjustments. Sir, what adjustments I have to make? I have to make simple prior period adjustments, non-recurring adjustments, non-operating adjustments. That's it. These three are the main adjustments. Prior period, extraordinary items, non-recurring items, non-operational items, non-operating items. These four adjustments only you have to do, Baba. Let us check the question. They are saying, sir, abnormal loss, which means this is non-repetitive item. This abnormal loss is non-repetitive item. So, sir, I have to make an adjustment for these. Okay, sir, here I will write abnormal loss. Abnormal loss adjustment. Arey Baba, think what we have to do. Sir, this abnormal loss of 1800 rupees was included in the profit of 2019. This 2019 may abnormal loss of how much, sir? 1800 is already adjusted. But we have to calculate future maintainable profits, which means how much profit will be maintained in the future. I will be only including those items which are essential for calculating the profits which are to be maintained in the future. But some abnormal event have happened in 2019 because of which my profit is reduced by 1800 rupees. Because of that abnormal loss, your profit is reduced by 1800 rupees, but you have to make an adjustment because that abnormal loss will not be repeated in the future. Since it is already deducted while calculating 2019 ka profit, now I have to add back this 1800 rupees. I have to add back this 1800 rupees. So what Prasad is saying is exactly correct. So this is the first adjustment which we have to make. Second adjustment. Profit of 2020 included a non-recurring receipt of 2500. Are Baba, they are saying this 2020 May there is one receipt which is there, and that is a non-recurring receipt. And that is a non-recurring receipt. Are Baba, you have to understand, sir, this non-recurring receipt is there na, that is adjusted in my 2020 ka profit. Sir, how much it is? 2500. That 2500 is receipt, which is an income. That is already included in my profit of 42,000 rupees. But that receipt you will not get in the coming future because it is a non-recurring item. Since it is a non-recurring item, because of which your profit have been increased, because of that non-recurring income your profit is increased. But now I am saying, sir, that is not your recurring item. So what you have to do is you have to make an adjustment, and that 2500 will not be repeated in the future. So what I have to do, sir, I have to deduct this. I have to deduct this 2500 rupees from the 2020 ka profit. Yes, sir, we have exactly understood what you are trying to say. ठीक है सर, yes sir. Last adjustment, Baba. Closing stock of 2021 was overvalued by 2400. Sir, what is the meaning of this? Are Baba, my closing stock is overvalued by 2400, which means, Are Baba, closing stock will be there on credit side. Closing stock will be there on credit side. If credit side ka item is more, obviously your profit will also be more. Let us assume an example. Okay? Yes sir. Sir, imaginary P&L account is there. Sir, my closing stock is there na. Let us assume my closing stock, how much I have taken is 1,02,400. 1,02,400 is my closing stock, and I have calculated the net profit, and I got the profit as 60,000 rupees. How much I have got, sir? 60,000 rupees is the profit which you have got. But this 1,02,400 is there na. This closing stock is not correct. Sir, how it is not correct? How much is incorrect? 1,02,400 is there na, out of which 2,400 is incorrect. So my correct closing stock would be how much, sir? Your correct closing stock would be 1 lakh rupees. Sir, if my correct closing stock is 1 lakh rupees, my profit is there na. That profit will be reduced by 2,400, which means it will be 57,600. I can say like this also, sir, because of your closing stock, your profit will be increased. But that is wrong. So you have to decrease your closing stock. If you decrease your closing stock, obviously your net profit also will be going to be increased. During articles, when I prepare FS, if the client wants to increase, we have to change the closing stock only to increase the profit. Yeah, I also remember this. This is the thing basically we don't have any control about. So obviously what we'll be doing in articles is we will be fixing one profit percentage. Net profit ka percentage we will find out, and that balancing figure will be closing stock. I hope you have remembered this point. If I want to declare 9% of my income, first I will declare this 9%, and balancing figure will be my closing stock. Okay, but you should not disclose those things to anyone, Prasad. Okay, it is not correct for you. Okay, sir. So here what we'll be doing is we will be making an adjustment of closing stock. Overvaluation of closing stock. Overvaluation of closing stock to be adjusted. Sir, what I have to do? I have to deduct that. Sir, how much is the amount? 2,400, Baba. Okay, sir. Here I will be deducting 2,400. Arey Baba, sir, I have calculated, and now I will be getting adjusted PBT. Now I will be getting adjusted PBT. Sir, if you check, first year ka profit will be 27,000 only, no adjustments, nothing. Second year ka profit is also 36,000, no adjustments, nothing. Third year ka profit 37,200, plus 1800 if you do, I think only this adjustment, so 39,000 will be the third year ka profit. 39,000. Fourth year, sir, 42,000 minus 2,500, sir, 39,500. Last point, 46,800 minus 2,400, I will be getting 44,400. This is my adjusted PBT. Now they are asking you to calculate average adjusted PBT. If you check the question, they are only asking simple average, 2.5 years of purchase. Yes, sir, we can aram se do that part. Simple average, if you do, you will get 27,000 plus 36,000 plus 39,000 plus 39,500 plus 44,400 divided by 5. If you do, you will be getting 37,180. Please confirm if it is correct. Please confirm if it is correct, and finally you will be calculating the goodwill. Sir, how this goodwill will be coming? It is very simple, Baba. You have to take average PBT and this should be multiplied by number of years of purchase. Yes, sir, number of years of purchase. So 37,180 multiplied by 2.5. Which means I will be getting 92,950, and this is my goodwill ka calculation. I hope this point is also clear. Please confirm if it is fine. So have you copied, Prasad, or do you want any time to copy? Anything is fine. I hope you have already copied, but if you want to copy, I can keep the screen so you can aram se copy this. I hope this case D is important. Other than this case D, everything is very normal thing only. Okay, oh, copied. Very good. So if you are done, let us quickly start second question, which is question number 9. Question number 9, let us calculate, Baba. If anyone wants to copy, they can copy this. You can pause the video and you can copy. If later, any student who is watching recorded mode, if you want to copy, you can aram se pause this, and you can copy this. So the next question will start, and that is chotu sa question, again goodwill valuation related, goodwill calculation related only. So let's quickly complete that part. XY Limited, a partnership firm, earned the profits during the past 4 years. They have given 4 years ka profit they have given. ठीक है sir, 4 years ka profits they have given, and if you check 42,000, 46,000, 52,000, 46,500. They are saying, sir, firm has total assets worth 82,000 rupees and its current liability includes only creditors of 12,800. Normal return they have given 10%, and they are asking us to calculate the value of the goodwill on the basis of 2.5 years of purchase of super profits. Simple. Super profits ka formula you have to remember, then this question will be answered easily. Sir, question number 9. Sir, Super profits. Sir, what is the formula of super profits? Very simple. Future maintainable profit you have to take, and from this you just have to deduct the normal profit. Okay, sir. Sir, let us just calculate the future maintainable profit. Sir, this future maintainable profit is nothing but the average. There are no adjustments which they have given in the question. So let me just calculate the average, and it is nothing but 42,000 plus 46,000 plus 52,000 plus 46,500. If you do average, if you take, you will be getting 46,625. Correct me if it is correct. Just check whether I am correct or not. 46,625 is the future maintainable profit. From this, you have to deduct the normal profit. Sir, what is the normal profit? Normal profit you will get like this. You have to take capital employed multiplied by normal rate of return you have to take. Sir, how I will get capital employed? Arey Baba, take the total value of assets, from that just deduct the total value of liabilities. Outside liabilities you have to deduct. 82,000 are the total assets. Creditors 12,800, which means 82,000 minus 12,800 if I do. This is nothing but 82,000 minus 12,800 multiplied by, sir, what is the normal rate of return? Normal rate of return is 10%. So this will give me my normal profit. So how much is this? 82,000 minus 12,800 into 10% if I do, I will get 6,920. 6,920 is my normal profit. So sir, which will give me my super profit as 46,625 minus 6,920. Sir, I will get 39,705. This is my super profit. ठीक है sir. So this normal profit का calculation I have done here. Normal profit. ठीक है sir. Simple. Sir, what is the value of the goodwill? आराम से you can just substitute the formula. Goodwill equals to super profit multiplied by number of years of purchase. Sir, what is my super profit? 39,705 multiplied by 2.5 years. Simple. 99,262.5. 99,262.5 will be my goodwill. 99,262.5 is my goodwill. I hope this question is also pretty simple. I think no doubts. So please check this. Please copy if you are fine. Let us just check the answer. 99,262.5. Yes, it is correct. This super profit is also, we have got the correct thing. So nice. I think we are fine. Please copy this if you want. Copy quickly. Guys, we are just enjoying. I think all these are very, very basic questions. No complications at all till now. Everything is quite normal only. Clear? Yes, Baba. Now, guys, now let us move to the next question, which is question number 10, Baba. Okay, so quickly start this question number 10. Another important, another very, what should I say, chotu sa question. So, okay, sir, let's quickly check that question number on 10. Very simple, Baba. Sir, they are given super profit as 4,50,000. Directly, they have given the super profit. Okay, sir. Normal rate of return, they have given 12%. Present value of annuity of 1 rupee for 4 years, they have given 3.0374. This also they have given. Simply, you have to calculate goodwill as per annuity method. Sir, how I will get simple, Baba? Multiply this super profit into this 3.0374. So 450,000 into 3.0374, if you do, you will get 1368,830. 1366,830. Okay, so please confirm if this point is clear. Do you want me to solve this question? I don't think it is necessary. So if you are fine, let us ignore. If you are fine, let us ignore this question. Chotu sa question, this is question number 10. I guess you have understood. So I am not solving this question. Okay. Now let us take this question number 11. Check this question number 11. And Baba, this is even simple. See, average profit they have given, sir, how much it is? Future maintainable profit is 7 lakh rupees. Future maintainable profit is how much, sir? 7 lakh rupees. And average capital employed by the firm is how much, sir? 55 lakh rupees. Sir, if you want me to calculate normal profit, my normal profit will be 55 lakh into 10 percentage. Sir, my normal profit will be 5 lakh 50,000 only, which means my super profit will be 7 lakh minus 550. Arey Baba, my super profit will be 1,50,000. Super profit will be 1,50,000. This super profit 1,50,000. They have also given the present value of annuity factor also 3.1699. Simple, 150,000 into 3.1699. If you do, you will be getting. Just a moment. Okay, sir. 475, 485 is the value which you will be getting. I hope this point is clear. Yes, sir. This point is also clear for us. 475, 485. I am not solving this question also, guys, because this is also aram se chotu sa question. We just have to calculate the super profit. If this super profit is already calculated, rest of the question is a very cakewalk to you. Okay. If this is fine, let us solve question number 12. That is a little bit interesting. Please check this question number 11. If it is also fine, let us check question number 12, Baba. Question number 12. This is important. So I just want you guys to go through this question for 1 minute. You have to go through this question for 1 minute. I will explain. Okay? But first, I just want you to go through. Yes, sir. Now let us take this question number 12. Guys, in this question they are trying to say, sir, if firm values goodwill under capitalization of profits method, its average profits for the past 4 years have been determined at 72,000 rupees. They are saying net assets and capital employed in the business are 4,80,000 and 5 lakh rupees respectively. And they are saying, sir, its normal rate of return is 12 percentage. Normal rate of return also they have given, and it is how much, sir? 12 percentage is a normal rate of return, sir. First one, they are asking you to calculate the goodwill based on capitalization of the average profits method. Capitalization of the average profits method. Guys, if you remember, let us just solve this question as per our formula so that you will link this. Okay, sir? Yes, sir. Question number 12, if you do, first let us do capitalization of average profits method. Capitalization of average profits method. Sir, I think if you remember, we have to calculate using step number 1 and step number 2. Sir, step number 1 may you have to find out the value of the firm. Sir, how I will be getting the value of the firm? Arey Baba, very simple. Sir, how much is the profit which I am expecting? 72,000 is the profit which you are expecting. Sir, what? 72,000 is the value which I am expecting, and they are clearly saying that normal rate of return is 12%. Aram se I can take that part. 72,000 divided by 12%. If you do, you will be aram se getting the value of the firm. Sir, my value of the firm is how much? 72,000 by 12%. If you do, you will be getting 6 lakh rupees. This is the value of the firm. Sir, my step number 2 is how much? Step number 2 is nothing but step number 1 minus net assets. Step number 1 minus net assets. Sir, how much is my step number 1? Step number 1 is 6 lakh rupees minus net assets. If you have checked, they have given in the question net assets as 480,000. So, sir, 6 lakh minus 4,80,000. The balancing figure is how much? 1,20,000, and this is my goodwill according to the average profits capitalization method. I hope this point is clear. According to the average profit capitalization method, sir, my goodwill which is coming is how much, sir? 1,20,000, Baba. I hope this point is clear. Now let us start second capitalization method, which is super profit capitalization method. Super profit capitalization method. Sir, here the formula is very simple. You just have to do super profit divided by normal rate of return. Sir, how you will be getting the super profit? This super profit will be average profit, or you can write future maintainable profit. From this you have to deduct the normal profit. From this you have to deduct the normal profit. Okay, sir? Yes, sir. Just a moment. Okay. I've just checked whether I have written the correct formula above or not. Yes, above also I have written correct only. So quickly check. Okay, where is the question I'm writing? Where it is? Here. Sir, average profit, how much they have given? Average profit, if you check, they have given 72,000. Okay, sir. 72,000 is your average profit. Sir, from that I have to deduct normal profit. Sir, how you will get normal profit? Normal profit you will get by multiplying capital employed into normal rate of return. Sir, here you have to take the capital employed. My capital employed is 5 lakh. So 5 lakh into 12% you have to take, and this 5 lakh into 12% is there now. If you deduct that, you will get 12,000 as super profit. If this 12,000 is my super profit, if I deduct this by 12 percentage, now this 1,44,000, I guess, sorry, 1 lakh. This 1 lakh rupees is nothing but my goodwill. This 1 lakh is nothing but my goodwill. Are Baba, this goodwill is there na. That's what I am saying. Ideally speaking, goodwill under super profit capitalization method and average profit capitalization method have to be same, provided your net assets and capital employed are same. Ideally they will be same, but if the question specifies, aram se you can take that as different. So goodwill under average cap is 1,20,000, goodwill under super cap is 1 lakh rupees. I hope this point is clear. So please copy this. If you have done, let us start with the next discussion. Okay. So goodwill ka valuation ka part is done, guys. I think we have solved all the methods with at least one example. So please be very conceptual when it comes to this goodwill. Please let me know if you have already completed. Then we'll start with the balance part. Okay, sir. Yes, sir. Guys, with this we have completed our goodwill valuation concept. Goodwill valuation, only 4 methods: average profit, super profit, annuity method, capitalization method. 4 methods, 4 formulas. We have solved questions also. I hope this point is clear. If this is clear, we have completed our first part of the chapter, which is valuation of the goodwill. So now let us directly jump into the further concept. Based on this only, examiner will test. Our examiner will test not the valuation of goodwill. They are going to test the valuation of the equity shares. They are going to test the valuation of the equity shares. Okay, sir. Sir, this valuation of equity shares is there na? This valuation of equity shares is dependent upon valuation of the goodwill. That is what I am trying to say. Correct or not? Yes, sir. Yes, sir. What you have said is we have totally understood. This valuation of equity shares, it is completely dependent upon the value of the goodwill. I just want to revise one thing, Baba. Okay, if you revise that one thing, you will aram se understand why you are actually learning the goodwill. Okay, fine, sir. Sir, okay, let me take the same balance sheet. Balance sheet. This balance sheet, if you remember, 186 lakh is the total liabilities ka total and assets ka total is also 180 lakh. Here, assume this investment in subsidiary is not there. Okay, let me just delete this data for the time being and assume in the balance sheet they have given the goodwill ka figure 20 lakh rupees. What I am saying is, while calculating the intrinsic value of the share, you have to take the fair value of all assets and you have to take the fair value of all the liabilities also. You have to take the fair value of all the assets and you have to take the fair value of all the liabilities. So what I have said is, sir, if your balance sheet includes this goodwill also, you have to recalculate the goodwill based on the day. You have to recalculate the goodwill as on the date which you want the equity share ka value. On the date you want the equity share ka value, you have to recalculate the goodwill which is there in the books of accounts. So that is the reason why I have calculated, why I have understood, why I have calculated this goodwill valuation. Why I have known this goodwill valuation, it is because of this reason that this goodwill should be included in calculating the intrinsic value of the share. Once again, if you ask me, you have to take the fair value of all assets. From that, you have to deduct the fair value of the outside liabilities. Then you will be getting net assets. If you divide that net asset by number of equity shares, you will be getting intrinsic value per share. I hope you are understanding. I hope you guys have got an idea as to why we have learned the goodwill valuation. This I have already explained at the starting, but now after completion of the goodwill valuation also, I am once again connecting the goodwill valuation with the intrinsic value of the share. I hope this point is clear. Yes, sir, this point is clear. So now let us understand. This thing. Valuation of equity shares. We have different methods, Baba. Aram se we will learn all those methods. But without making any further delay, let us directly start with the method number 1, which is super important from examination perspective. 90% chances they will ask this intrinsic value of the share ka method only. ठीक है सर, 90% they will ask this intrinsic value of the share ka method only. Sir, this intrinsic value of the share is also known as asset backing approach method, because you are calculating value of the share based on the net assets of the entity. Therefore, this is also called as asset backing approach, also called as intrinsic value of the share. Sir, how I will get this intrinsic value? Simple. Net assets for the equity shares you have to calculate it divided by number of equity shares. This is the formula which they have given in the question. Net assets for equity shares divided by number of equity shares we have to take. Sir, how I will get this net assets? Arey Baba, if you apply common sense, you will understand how you will be getting net assets. So yes, here I can write, sir, first of all, what is the meaning of net assets? Net assets are nothing but total assets minus outside liabilities. I hope this point is pretty clear to you. Yes, sir. Arey Baba, if you remember the capital employed, which you are using for the calculation of goodwill, same calculation you will be doing. But if you remember, you will exclude one item called as goodwill. Sir, but goodwill will be included provided if it is a purchased goodwill. But we will not assume goodwill as a purchased goodwill. We will always assume goodwill as a self-generated, unless the question mentioned. Unless it is mentioned in the question, we will always treat the goodwill as self-generated goodwill only. Okay, sir. So now while calculating the net assets, I also have to take total assets minus outside liabilities. Arey Baba, but this value you have taken already while calculating capital employed na. So now why calculate double time? So what you can use here is, sir, I can directly start with capital employed. My net assets का calculation में I will be directly starting with my capital employed only as a basis. But just now I have said, sir, goodwill valuation is very important. Sir, but we will not take the value of goodwill which they have given in the books of accounts. We will be recalculating the goodwill on the date where you want on the date of which you want the valuation. So this capital employed though, I have to add the goodwill. Whatever the goodwill you have calculated, you have to add this value of the goodwill. So this is the first adjustment you have to remember. Again, we will not calculate the fair value of all assets and fair value of all liabilities. Not required, Baba, because while calculating goodwill, you have already calculated capital employed. So I will directly take the benefit of that capital employed, but goodwill I have to add. But this you have to remember. Itna you have to remember. Goodwill only you have to add, sir, but another item also I have to add. Sir, what is that another item you have to add? Arey Baba, if you remember, while calculating capital employed, I have said that, sir, if any non-trade investment is there, if any non-trade investment is there, sir, what I have said is, Arey Baba, these investments are not related to your business. These investments are not interlinked to calculating the goodwill of your business. So what I have said is, while calculating capital employed for the purpose of goodwill, I asked you to exclude these non-trade investments. If you remember, sir, I as a stationery business, I have made some investments in Geo Limited. Arey Baba, what is the difference between stationery and investment in Geo Limited? That's why I have said that if you want to calculate the goodwill of stationery company, stationery shop, your investment in Geo Limited will be of no use only. So you have to ignore that. That's what the logic which I have explained while calculating the capital employed for the purpose of calculating goodwill. But now, what I will be saying is, you are calculating the value of the share. You are calculating the value of the equity share. This time not from the business perspective. This time you have to calculate the value of the share from the equity shareholder perspective. Equity shareholder will comes and now he will say that, okay, whether the company have made investments in Geo Limited, what is the problem which I have? My value of the share should definitely include that non-trade investment ka value also. While calculating capital employed for the purpose of goodwill, the logic which I have explained is, Arey Baba, you are calculating the goodwill only for the stationery business. So that's why don't include non-trade investments. But now, no, equity shareholders are saying, who cares about stationery business? I want my share ka value. Therefore, you have to add back this non-trade investments also. You have to add back this non-trade investments also to get the intrinsic value of the share. I hope you have understood this point. Please give me a heads up if you have understood, otherwise I will repeat the point once again. You have to understood the difference between capital employed, which you are using for the goodwill purpose, and net assets, what we are using currently for the purpose of intrinsic valuation. I hope this point is clear. If you want, I will repeat the point once again, but if you understood at the first time itself, your understanding will be next level. Arey Baba, you just have to understand the purpose of calculation. Sir, why you are calculating the capital employed? Sir, I am calculating capital employed for the purpose of goodwill. Oh, so if you want goodwill, no need of trade investments, but no need of non-trade investments. But if you want to calculate the value of the equity share from the point of equity shareholder, that person is saying, what problem will I have if the company makes investment in non-trade investments? I want my share ka value. So I don't know anything what you will do. You have to include this non-trade investment also. You have to include this non-trade investment also in the intrinsic value calculation. That's it guys, only 2 points you have to remember. Whatever the capital employed which you have calculated while doing the goodwill ka valuation, add goodwill to that and add non-trade investments also to that. If you add these two items, you will be aram se getting net assets available for equity shareholders. Oh, capital employed plus non-trade investments plus goodwill if I do, I will be getting net assets available for equity shareholders. I hope you have understood this format. Please give me a heads up if you have understood this. If we are fine, let us move further. Or if you want any further explanation, I am happy to do that. If it is fine, it is excellent. Check this format and are you relating this to the net assets? Have you understood the logic or not? If you have understood the logic, guys, no need to mug up anything. ठीक है sir. So now, sir, I don't want this formula. Can you give me another alternative method? Of course, there is another alternative method also. Alternatively, it can be calculated as fair value of all assets minus fair value of all liabilities. But this time, take the goodwill also. But this time, take the goodwill also. But one thing you have to deduct, and that is called as amount due to preference shareholders. Amount due to preference shareholders also you have to deduct, Baba. Then you will get net assets available for equity shareholders. Here, why I am not deducting that amount is while doing capital employed itself, I will anyways deduct the preference shareholders ka funds. Okay. Here you have to take fair value of all assets, including goodwill, including non-trade investments also. Simply speaking, ignore this. Just go with this. Just go with this. But if you are a student, sir, who wants again a new formula, this is for you. Take fair value of all assets, but this time take goodwill, take non-trade investments. From that, deduct all liabilities. If preference share capital is also specifically there, whatever the amount due to them, that also you have to deduct. So this includes preference share capital also, and preference shareholders ka dividend if it is any payable. That also should be excluded. Then you will be getting net assets available for equity shareholders. I hope this point is clear. So those who have understood, so I just want you guys to make a note of this, and once you have copied, let us move further. Please copy quickly, guys. So guys, I think this important note also you can write. Okay, first copy this, then you can write the important note also, first point. You can understand this first point. Okay, aram so you can understand, just write that point, you will understand. Then I will explain from second point. That is important, very very important, second point, by the way. Oh shit. Oh, my bad. What I have said is you can copy the first note also. So this first note is you have already understood. Okay, so you can copy this first note as well. That's what I have said. Nothing more than that. So please copy the first note as well. Okay, so fine. Now, the most important second point is there. Guys, this second point is very important. 100% this second point is important. They will definitely test based on this second point. So I just want to confirm, should I start this second point right now, or can we start this point freshly tomorrow? Because if you don't understand this, nothing you can remember. Highly important point. Definitely this adjustment they will give in the question, and this is little bit conceptual. Okay, so what I am thinking is, you have to revise what we have completed till now, and this second part ka discussion we will start tomorrow. Okay, from tomorrow, after this second point got completed, we will immediately start with examination problems. Okay, study material ka problems first we will do, and once that was done, what we'll be doing is we will be starting with the next things. Okay, students are saying we can continue. Okay, fine. If you are that much interesting, if you are that much eager, then probably we can discuss the second point also now itself. So yes, we can get started. So check this. Here what they are trying is, in case of partly paid up equity shares. So what is the meaning of partly paid up equity shares? I think you guys have known about this word, partly paid up equity shares. Sir, assume the face value of equity share is 10 rupees. Assume the face value of equity share is how much, sir? 10 rupees. And they are saying, sir, paid up value. Paid up value is only 8 rupees. This is called as partly paid up share. This is called as partly paid up share. Okay, sir. Partly paid up share is understood. We have understood face value is 10 rupees, paid up value is 8 rupees. Okay, sir. If any partly paid up equity shares are given in the question, what they are trying to say is, notional call amount will be added to make them fully paid up while calculating net assets available for equity shareholders. Sir, I have written something, but first this point you will understand only after checking this example. ठीक है sir, first check this example. Sir, assets का value 40 lakh they have given. Equity share capital में I have two categories of equity shares. I have basically two classes of equity shares. First class of equity share is 1 lakh equity shares of 10 each. Second class of equity shares are 1 lakh equity shares of 10 each, but only 8 rupees is paid up. Reserves and surplus ka balance also they have given 17 lakh rupees, and liabilities ka balance they have also given 5 lakh rupees. Guys, please confirm whether this liability ka total is matching with 40 lakh or not. Please add and confirm and tell me, is this total matching to 40 lakh or not? 10 plus 8, 18 plus 17, 35 plus 5, 40. I guess it is matching, but I want confirmation from your side. Is this liability matching or not? Liability ka total. Please check and tell me. Yes sir, it is matching. Fine. Now let us try to understand. Sir, this 40 lakh is done, sir. This is the balance sheet ka value. Assume the fair value of the balance sheet. Sir, assume the fair value of all assets 80 lakh rupees. Just for example purpose I am saying, sir, assume the fair value of the assets are 80 lakh rupees. From these, if I deduct the fair value of liabilities, if I deduct the fair value of the liabilities, there we are having 5 lakh rupees. Okay, here I will take 5 lakh rupees only as the value of the liability. Sir, can you tell me my total? Can you tell me the difference amount? Difference amount is nothing but 75 lakh rupees. This 75 lakh is nothing but net assets. This 75 lakh rupees is nothing but net assets. I think this point is clear. Till this point, I think this is completely clear. Okay? Yes sir. Now the problem is this 75 lakh rupees ka net assets are there na. There are two shareholders which are there. There are two shareholders which are there, sir. First set of shareholders are 10 rupees paid up wala. Second set of shareholders are those shareholders who have paid 8 rupees paid up. Have you understood this issue or not? 75 lakh is the total net assets which I am having, and I am having two category of equity shareholder. One set of equity shareholders are 10 rupees paid up, and another set of equity shareholders are 8 rupees paid up. So, sir, what I have did is, first I have calculated, sir, for 1 rupee of equity share, if you have paid, how much net assets will be belonging to you? First I will calculate. You will understand little bit. Sir, total number of equity shares. Okay, first I will be calculating this total capital. Total capital I will calculate. Sir, 10 lakh plus 8 lakh rupees. How much it is? 18 lakh rupees. How much, sir? 18 lakh rupees. Which means if you calculate 75 lakh upon 18 lakh, you will get 75 lakh divided by 18 lakh. If you do, you will get 4.17 rupees. You will get how much, sir? 4.17 per 1 rupee of capital. Try to understand, you will aram se understood this point. Sir, if I give 1 rupee capital, I will get 4.17 rupees of net asset. Have you understood this or not? Here what I have calculated is, sir, for 1 rupee of paid up, if I paid 1 rupee, I will be getting 4.17 rupee ka net asset. Yes sir, this point is clear. Now my question is, sir, if I paid 10 rupees paid up, if I paid 10 rupees, sir, the value of net assets which I will be getting is 10 into 4.17. 10 into 4.17 if you do, you will get 41.7 rupee ka net asset. If you are having 1 rupee, you will get 4.17, which means if you have given 10 rupee ka paid up value, you will be getting 41.7. Yes sir. Similarly, if you do the same calculation, sir, here I will be getting 8 into 4.17. Just for the time being, if you do, you will be getting 33.36. How much, sir? 33.36 will be the value which this 8 rupees paid up wala shareholders will be getting. 75 lakh are the total net assets, out of which 10 rupees paid up shareholders will receive 41.7 and 8 rupees paid up wala will receive 33.36. Have you understood till here or not? Please tell me. Have you understood till here or not? 10 rupees paid up shareholders will receive 41.7, 8 rupee paid up wala will receive 33.36. Yes, sir, we have understood this point also. Brilliant. Now, if you observe, sir, how much net assets, once again, this calculation I will just keep here. Sir, I am having how many equity shares? 1 lakh equity shares you are having. If I am having 1 lakh equity shares, I will be getting total value of 41,70,000 for 10 rupees paid up shareholders, and 1 lakh into 33.36 if you do, you will be getting 33,36,000 rupees. 1 lakh equity shares of 10 rupees paid up persons will get 41,70,000 and this persons will get 33,36,000. I hope you have understood. Yes. Now try to understand from these 8 rupee paid up wala shareholders. They are saying, Are Baba, this kind of calculation is totally wrong. This kind of calculation is totally wrong. If you observe here, Are Baba, if you check these two categories of shareholders ka face values are same. This face value is also 10 rupee. These persons ka face value is also 10 rupee. But this person is saying, Are Baba, I have paid fully. I have paid entire 10 rupees. But these persons have only paid 8 rupees. But if you observe with this amounts, obviously they have invested in assets. With this amounts, obviously they have invested in assets, and this assets ka fair value, based on this we have calculated the net assets, and I have apportioned the net assets between their paid up value. But what they are trying to say is, sir, we are also 10 rupees face value, you are also 10 rupees face value only. But sir, we have not just paid our 2 rupees, that's it. The reason also, company have not asked us. If company have asked it, obviously we will be paying. Which means the rights of these persons and the rights of these persons both have to be the same. Both have to be the same. Because if you observe here, the difference is only 2 rupee per share. If you observe, the difference is only 2 rupee per share, but if you observe the net asset ka difference, it is too much. It is too much, which means the fair value of the assets are mostly enjoyed by 10 rupee paid up wala persons. And it is enjoying, but very less amount of net assets are given to 8 rupee paid up wala. But the actual difference between us is only 2 rupees. Try to understand. The actual difference between us is how much, sir? Only 2 rupees. But if you check the fair value allocation, there is a huge difference in the margin. Now the shareholders are saying, Are Baba, the difference between you and me is only 2 rupees. So now what these persons are saying is, don't do injustice for us. Don't take this much margin. What we will be doing is, first we will give you that 2 rupees. Oh, if we also give that 2 rupees, obviously we both are same. Correct or not? Yes, sir. If we give that 2 rupees, we both are same only na. Then let us do the allocation. Are you understanding the point or not? They are not ready, because here the difference is only 2 rupees. But if you allocate the fair values, the margin is too much. So they are saying, Are Baba, first let me pay. Actually they will not pay, but notionally they will say that they will pay. Oh, sir, why notionally they will pay? You will understand. Aram se. Wait. Okay, ignore that example for the time being. Ignore that example for the time being. Now try to understand what I am trying to say. Fair value of all assets, assume it is 40 lakh rupees only. I have taken same face value, I mean same book value as a fair value. Liability to 5 lakh, so my net assets is 35 lakh. Now I am saying you have to ask these 1 lakh shareholders to pay that 2 rupees. ठीक है सर, but that is notional call, which means those 1 lakh shareholders will pay me 2 rupees, sir, which means your total will be how much? My total will be 2 lakh. Arey baba, I will be receiving cash from that shareholders, which means obviously my net assets will be increased by 2 lakh rupees, which means it will be 37 lakh. It will be how much, Baba? 37 lakh is the value of the shares. Yes, sir, we have understood. Now, if you check, sir, the total number of shares are how much? 2 lakh. Because these are also 10 rupees paid up, these are also 10 rupees paid up, which means total 2 lakh shares are there. So 37 lakhs divided by 2 lakh, if you do, you will get 18.5. How much I will get, sir? 18.5 you will get. Now, if you observe this 18.5 is equally related to, okay, let me continue this example only, Baba. Sir, here what have happened is, sir, how much is our net assets ka value? Net assets ka value is 75 lakh, Baba. Let us continue from this only, you will understand. Sir, net assets are how much? 75 lakh. Now, I am asking those 1 lakh shareholders also to make the 2 rupees payment. Then, my net assets will be how much? My net assets will be 77 lakh. Now apportion these 77 lakh to those persons. So which means now I am having 2 lakh equity shares. 1 lakh shares are also 10 fully paid, another also fully paid. Now if you do the bifurcation, you will be getting 38.5 is the value per share. 38.5 is how much, sir? Per share. Now understand what I am doing. Sir, out of this, we have 10 rupees fully paid up wala shares. 10 rupees fully paid up wala ko, I will be giving 38.5. No worries at all. 8 rupee paid up wala is there na. These 8 rupee paid up wala ko, I will write 38.5. But, instead of taking that 2 lakh rupees and again paying them, I won't take that. So here I will write that 2 rupees, because that 2 rupees is not actually taken by me. That is notional. Sir, why we are doing this? Arey Baba, very simple. First, why take 2 rupees and later again pay 38.5 rupees? Are you understanding or not? So instead, I will directly take 36.5 per share. Here I will take 36.5 per share. Now, if you observe, this 10 rupees paid up wala shareholders will be getting 38.5 rupees. This 8 rupee paid up wala will getting 36.5. Now, these persons are same because the margin is greatly reduced only to 2 rupees. That is difference. That is nothing but the difference in paid up value. Have you understood the point or not? Here what I have did is, Arey Baba, first you have collected 2 rupees from them and now you are again paying 38.5. Why? Don't collect that 2 rupees while paying also deduct that 2 rupees. So 36.5 will be the value which these 8 rupee paid up wala shareholders are actually earning. Please confirm if this point is clear. You have to add this notional call just to make both category of shareholders equal to calculate this value. Later, this value will be apportioned by 10 rupee paid up wala as well as 8 rupee paid up wala also. This 8 rupees paid up are there na. I will not collect 2 rupees and again pay them 38.5. Instead, I will pay only 36.5. Please give me a heads up if you have understood this. Once again, I will repeat the example, but this you have to understand. Sir, why you are doing that like this? Because the margin is greatly reduced. Earlier, the margin is how much? 41.7 for 10 rupees paid up, 33.36 for 8 rupee paid up, but this is not no more. After doing the adjustments, 38.5 per share will be belonging to 10 rupees paid up and 36.5 per share will be belonging to the 8 rupees paid up wala. Okay, fine. Another example also we'll take. ठीक है, yes sir. So check this. Sir, fair value of all assets are 40 lakh rupees. Fair value of all liability is 5 lakh rupees. So total net assets I will be getting 35 lakh. Now what you have to do is add this notional call of equity shares. This amount you will not collect from them, but just add it notionally. So how much you will get? 37 lakh I will get. Number of shares are how much? 2 lakh, because both are fully paid by the way. Then you will be getting value per share as 18.5. 10 each fully paid ka value is 18.5 rupees, and 8 rupee paid up wala value. Sir, have you got that 8 rupee paid up wala value? I will be deducting 18.5 minus 2, then I will get 16.5. Now the margin is greatly reduced. Now the margin is greatly reduced. So if you read this point, you will understand. In case of partly paid up equity shares, first you will be adding notional call to make them fully paid up, while calculating net assets available for equity shareholders. While calculating value of such partly paid up share, such call will be deducted. Such call will be deducted because it is very simple, Baba. The difference between these two persons will be those 2 rupees only. So first what we have assumed, first we have assumed they have paid the 2 rupees, but actually they will not pay, therefore it is notional. Arey Baba, if you observe, sir, why take 2 rupees from them and now you are paying 18.5 to them? Rather, don't take the 2 rupees, just pay them 16.5. Guys, watch this once more. After completion of this session, still if you have any doubts, you have to watch this once again. Every doubt will be clarified. Every doubt will be clarified, but have you understood this point or not? In case of partly paid up equity shares, notional call will be added to make them fully paid while calculating the net assets available for the equity shareholders. While calculating the value of such partly paid share, such call will be deducted. Okay? Yes, sir. So this point is pretty clear. This point they have been given in number of examples, Baba. So you have to be very, you should get complete clarity with respect to this point. Now you can copy this part. Okay, and that's it for today, guys. We have discussed very nicely most of the important concepts we have discussed. From tomorrow onwards, we will be solving very good problems. Okay, very lengthier problems are there. Lots of mistakes are there in our study material. So we will be rectifying those, and that is going to be an enjoying session. Okay, because that is going to be really enjoying. Questions you will love. Actual CFR begins in this chapter, valuation of shares and goodwill, because big problems you have to do. Okay, sir? Yes, sir. So with this, first you can copy. After that, we can close the today's session. Okay, fine. I will share the notes. Okay, I will share the notes. Thank you so much for your time. Thank you so much for your participation. Okay, I just wanted to stop 20 minutes earlier only, but your interest only have made me to explain this point. Okay, thanks for the interest. And if you maintain this type of interest, you will aram se get 90 plus. Trust me. Okay, yes, sir. I will share that notes. No need to worry at all. So that's it, guys. That's it for today. We'll continue in the next class. Thank you so much. That's it for today. Yes, sir.